It's time for Real Estate 101 with the Karey Brown team from Realty Executives
Good
Preferred
Sunday morning to you.
Advisors.
This is Karey Brown, broker-owner of Realty Executives Preferred Advisors, and you're listening to Real Estate 101. Today I am here with Robert Wilson from Landmark Bank. Good morning, Robert.
Good morning.
He actually has a pretty good radio voice in spite of being a little nervous here today. I think he's going to do a great job. Okay, so let's start off talking about what buyers need to be prepared for whenever they apply for a loan.
Yeah. So being a buyer nowadays is, if you've bought a home in the last 8 years, you're basically like a first-time home buyer again because of all the program changes with the regulations. Starting off, first thing I would always do is contact your local lender. Reach out to them, find out what paperwork we might need up front from you, just to take the application process. Find out if there's anything that we need to work on before we, start with the pre-approval process. There's things in regards to going online to fill an application. If you can't get into the office to see us, we can always take an application over the phone. If you have 10 to 15 minutes, we can get most of the information that we need from you just even over the phone. If you're, wanting to meet with us face to face, our offices are always open. Call, make an appointment. We'd be happy to, have you come in, kind of talk to you about the whole process in general, from beginning to end. Because if you are looking for, to find out how much you're approved for, all the way to, even know if if your credit's good enough to be qualified. Those are the things we're going to need from you off to start to, make sure that we can keep moving forward with the process and find out if we're ready right now or something we need to work on in the future to get to that process.
What kind of information should they have handy for that phone call?
For that phone call, we're going to need your basic information, your social, date of birth, income, obviously your current address. If you know what property you're looking at, we'd like to have that so we can kind of help you out with more of a detailed payment. You're going to look at more of a detailed how much funds you're going to need for the qualification. But if you can have like your income base, social, date of birth, that's kind of the three main things that we're going to need.
And when it comes to the final, I have to have these documents. Let's hit on what those documents are.
The main documents we're going to need are your pay stubs, your W-2s, and tax returns if possible. Depending on, what type of income you have coming in, if you're W-2, you're 1099, you may not have some of the information that we're needing. But if you can have that stuff for us up front, it's going to be an easier process. We don't necessarily need it, but it's something that we will eventually need before the loan would close.
So gathering that up and just having it all in place is going to be super helpful for everybody.
Correct. It's going to make the process easier. There's less hiccups, less probably hoops you have to jump through in regards to getting a mortgage. If we have that documentation up front, we're going to be able to get a better grasp of the file and knowing that, we know how much you can get approved for. We know there's not going to be any loan-to-value issues or anything like that.
I know oftentimes whenever you deal with certain specific buyers, and say, for instance, they are on a cash basis payroll or say they're commission based, what are good ways to handle those?
When you talk about cash buyers, we would have to have something in regards to like 1099s or tax returns. If you're, you're working and you get paid cash, and you're not reporting it to the IRS, unfortunately, there's nothing that we're going to be able to do for you. We do have to verify that income somehow. Whatever you're telling the IRS, what you're making for the year, in return, we're going to have to document it that way because they have to, match up. If regards to commission, we're going to look at the tax returns. We're going to need probably 3 years if we could of your tax returns, or 2 years and a year to date would be nice. If you have a CPA involved, or depending on a cash flow, something like that, we can possibly use that, if you're in the current year.
So explain the difference between pre-qualified for a loan and pre-approved for a loan.
So the difference between a pre-qualification and a pre-approval, a pre-qualification is going to be when the customer comes to us for the first time. We're taking down their information, and we've plugged everything into our system. If the system agrees with what we have put in there, they like what they see, they're going to send out a pre-qualification letter. The reason that there's a difference between pre-qual and a pre-approval is not everything's been looked at by an underwriter. We haven't looked at, if we don't have a house in mind yet, we don't know what the taxes are going to be. We may not have gathered up the pay stubs, the tax returns, so loan to values may not be correct of what we've got from a verbal to actually seeing the tax returns in W-2s. There could be other things that pop up, depending on if credit could change from the time of when we pull credit to the time we close. There's a lot of different aspects to a mortgage where things could change from the beginning to the end, all the way even to an appraisal being different from what we're hoping the appraisal to be at. These things can change a loan throughout the process. The pre-approval part is when the underwriter has looked at it, the underwriter has approved it, and it's going to the closers, to to the title company, whoever we're going to close the loan at that point.
And when you mentioned pay stubs, how many pay stubs do you need?
We like to have at least 30 days of pay stubs. So depending on when you get paid, if you're biweekly, we like to have 2 or 3. If you're weekly, I like to have 4 to 5, and if you're monthly, I like to have 1 to 2 if possible.
Okay. And tax returns, how many years do you need?
Tax returns, we like to have at least 2, depending on the programs. If this income-based programs, then we have to have 3 years of tax returns.
And you guys also verify employment. And let's talk about how many times you do that in the loan process.
We verify the employment process depending on how long the loan is, and if the loan gets moved. We initially do it the first time to make sure that who you say you're employed with is actually who you're employed with. Then we will actually do a verbal verification of employment with 10 days prior to closing, just to make sure you haven't changed jobs, went from a full-time to part-time position or anything like that, 10 days prior to closing. That way we know the income that we have in the system is true and correct.
And if they were to change jobs during a loan process, what explain that? Because I know that there are ways that that's okay, and then there are ways that the deal's done. Correct.
First thing you don't want to do is make sure you let your lender know that you're going to be changing jobs. If you're even thinking about changing jobs, I would probably try to connect with the lender, let them know what you're thinking about doing. That way we can prepare for the changes that will need to be made. If you do change jobs, we do have to have 30 days of pay stubs if possible for the loan. There are some, gray areas where if you're becoming a salary position, if we can get a letter from your employer with like a commitment letter, knowing what the income's going to be, we can use that, and then maybe only need 1 pay stub and not have to have the 30 days of pay stubs.
So key point there is to always discuss that with your lender.
Correct. Anytime you're changing anything with income, even if increases in pay or, time on the job or anything like that, you make sure you always contact your lender, because that's always going to be one of the big things is the income in the pre-approval process.
Say, for instance, they've had hits on their credit, but they've paid it. I know oftentimes they have to write an explanation letter. Mm-hmm. Explain what they would need to be explaining.
When we pull your credit, we're going to be able to see everything on your report. As a mortgage company, we pull all 3 bureaus. We'll pull Experian, TransUnion, and Equifax. If you've had issues in the last, 6 to 7 years, all that is going to show up on there, even from a collection to a judgment to 30 to 90 days late. Anytime those are on there, we have to get an explanation of reason why those, occurred. If it's something that you just missed a payment, or if it's something that wasn't yours and it's being disputed, we still have to get that information, because the underwriter has to know the whole story behind your credit each time we try to close the loan.
So you're an open book at that point. Just know that going into it, but also realize that everybody, and not everybody, some people are perfect, but most people have issues at some point in their lifetime. Mm-hmm. So nothing to be ashamed about, just might have to do a little bit of explaining. So say, for instance, I know that there's a period of time there where a lot of people lost their jobs and, the market essentially crashed. And so that some people went into foreclosure and things like that. So say, for instance, they have a foreclosure on their credit report, but they maintain their credit other than that. what is the typical time frame that they could get financed again?
Depending on the foreclosure or if there was a bankruptcy involved, it could be anywhere from 1 to 3 years till we can be able to get the pre-qualification going again. If you're still in the bankruptcy at the time of trying to get the application done, we actually can't even take an application. But if you've, depending on what type of bankruptcy, if it's Chapter 7 or Chapter 13, and what was all in it, we can, maybe do it in 2 years, 3 years. There are some points where we can do it at a year. We just have to get, the right type of documentation to show that the things that were in the bankruptcy, things that, aren't going to affect us in the future on the getting pre-approved for the mortgage.
What are other common things as far as credit is concerned that you guys address during the loan process?
In regards to some credit issues, we do have to make sure we address all the collections and judgments if there are any on your credit. All judgments, if you have a judgment against you, has to be paid off in full before we can close. There are some issues in regards to some title work that if there is a judgment out there, we cannot close until that's been paid in full. In regards to a collection, which is a little bit different from a judgment, not necessarily do they all have to be paid off, but I can't have an outstanding balance of $1,000 or more for us to be able to move forward. Some other things we can talk about would be like in regards to, getting new credit. If you had credit on there that we can't see, we will have to, document that. There are some, banks, that just don't report to the credit bureaus, and I have to know to make sure that you don't have any other outstanding debts out there where I have to include into your debt to income. Another thing we're talking about from the loan pre-qualification process to the loan pre-approval, to make sure that you don't try to go out and get any new debt, not going out there to getting an auto loan, a boat loan, anything like that. If you do feel like you need some type of a loan before the mortgage closes, once again, you're going to want to contact your lender to make sure this is something that's going to be okay and not going to cause any problems in the future for us not be able to close on the mortgage.
I know with our office, we have documentation that we've put together that has the things that lenders most likely will ask you for, along with the please don't do when you're in the middle of a contract. Because we want you to make sure that you're living in your house and not that new car and boat you just bought. So in summary, as far as this first part is concerned, what would you say to a buyer that's going to look at houses and their first steps?
First step is always to get the pre-qualification letter. And not just for if you're using a realtor, to make sure that for your peace of mind that the houses that you're looking for, you qualify for. You don't want to be going out looking for a bunch of houses in a price range, one that you're not going to be able to afford, or not going to be able to qualify for. It's a lot of time that the realtor's taking, the lender's taking to get to that process where that seller's hoping that person is going to buy this house. You don't want to get to that end of that loan and find out I couldn't buy this home because you never went and got a pre-qualification letter.
Not to mention the fact, looking at it from our side, and we see almost every time, if your pre-approval is not done, most sellers will not even entertain your offer. Obviously, as realtors, we're required to present them, but they are not required to accept or even discuss. So you don't want to get your heart set on a house and not be able to, even discuss it. Mm-hmm. You want to have your leverage there, and the first thing is making sure that your financing is done. You'd be surprised at the number of people that think, oh, well, no problem, but they've never even looked at their credit score, so they don't know. Things, stolen identities happen, child support, all kinds of crazy things can show up. Just accidentally somewhere along the line puts in the wrong name, especially if it's a common name, and things are showing up. So you want to make sure that that's nice and clean, taken care of. Again, if you've got blemishes on your credit report, you're human. Nobody's going to judge you for it. We just have to get it cleaned up.
Correct. And like I said, the regulations have changed a lot. If you bought a house in the early 2000s, it's a completely different ballgame than it is in 2017 now, where there's so many more things that we're going to look at in involved with your credit, where that pre-qualification letter is, that's where it all starts.
Absolutely. Thanks for joining us at Real Estate 101. We'll be right back after the commercial break.
Southwest Topeka has a good neighbor. State Farm agent Jim Garrison, now at 29th and Urish. If your current insurance situation has you going around in circles, get off the roundabout and stop in and meet Jim and his wonderfully efficient staff. Let Jim Garrison give you a quote and make the Garrison comparison. He's confident that with State Farm's competitive rates, the right coverage, and his unmatched service, you'll want to make him your new insurance agent. Like a good neighbor, State Farm is there, and Jim Garrison is there for you, northeast of the roundabout at 29th and Urish.
Thanks for joining us again at Real Estate 101. I'm Karey Brown, broker owner of Realty Executives Preferred Advisors, and I'm back with Robert Wilson with Landmark Bank. Good morning, Robert.
Good morning.
Off the bat, let's talk about some things that we need. If you're planning to sell your house, we are desperate for listings. We are at a record low on the MLS. We're on 4 different MLSs, and that is across the board, really. We're finding, so we have buyers, we need sellers in the worst possible way, which means that now is a really good time to be a seller because you've got some serious leverage. We just put a house on the market today and have multiple offers, so can't ask for anything better than that. So this second half of the show, we're going to be talking about the great products that are out there that most people don't know exist, the fact that if you haven't bought a house in quite some time, you could actually reapply for an FHA loan. So there's a lot of really great things that he's going to be sharing. But first off, let's start with how to get a hold of you.
Yeah. So the easiest way, obviously, is contact by phone. My phone number here at Landmark Bank is 785-228-8619. And you can always reach me by email at rwilson@banklandmark.com. You can also reach me on my website at www.robert.banklandmark.com. There you can actually fill out a full application and there's a little bit of a life story about me. And if you want to get any more extra questions, there's frequently asked questions on that website and just other things that you may have questions about. If you can't get a hold of me right away, you can always look at some things on my website to me answer some questions for you.
And if you have any questions, give us a call at 785-213-5188. We know how to hunt Robert down. Okay, so let's talk about great loan products that are out there that consumers need to know about.
Correct. We talked about, you said if you're a first-time home buyer, you may not even know that you're a first-time home buyer again. If you hadn't owned a home in the last 3 years, you're considered a first-time home buyer, and we actually have a few different new programs out there for you that may benefit you. A couple of them actually in regards to down payment. There's one that we can even get you in possibly with not even having any money down. It's actually a down payment assistance program. Not only are you not have to bring anything down, they're actually giving you the funds to put down on your mortgage. That program is called the Kansas Housing Assistance Program. It is a new program in the area for the last couple of years. You'll probably hear some people refer to it as the KHAP. It is an income-based program. You cannot have owned a home in the last 3 years. There is a few different programs attached with the KHAP in regards to how much we can put down. There's an FHA, there's a VA, there's rural development, and there's conventional, all with the program. But all 4 of those will actually help you and assist you with the down payment. Where it's kind of nice, depending on, where you're at with the contract on the home, we could get you into the house without bringing anything down at closing.
That's awesome. And we also help with, I know whenever we write contracts, we ask that the seller help you with buyer's closing costs and prepaids commonly, especially if it's something that you need. The majority of us as agents prepare sellers for that, so they know that it's a possibility. So, that's a really great way of, not coming to closing with anything. And, more recently, VA was pretty much the only one that you had that option. I guess rural development maybe. Mm-hmm. So let's talk about zero down loans.
Mm-hmm. The Kansas Housing Assistance Program would be the one that we have right now, other than maybe the rural development. All these programs, when it comes to down payment assistance, there's going to be a little bit more stipulations involved. where there's some steps to make sure that we have to have documented to make sure we qualify. And in regards to the KHAP, we talked about how it's income based. You're going to want to contact your lender to find out, what that income limit is, because it does change from county to county. It does change from, how many people are in the household as well. So there are a lot of different income limits that could change in regards to it. It's also going to depend on credit. We have to have minimum scores on certain, those programs. If we're, doing the conventional KHAP, then we're looking at a 640 or better. And if we're looking at an FHA KHAP, we're looking at 660 or better. So some of those things, we have to have to even qualify for the loan. And it is a black and white area. It's not gray where, if it's a little bit below the 660, can we still make it possible? No, the program won't allow us to move forward without some of these, regulations taken care of.
So if you are looking at a conventional loan, let's talk a little bit about those.
We have a couple different conventional loans out there right now. We have your basic conventional where the minimum starts at 5%. Obviously, the more you put down, the better you're going to get in regards to your PMI. But we also have a new program out there called with the Home Possible Advantage for first-time home buyers. This allows the buyers to come down with 3%, not having to come up with a 5%. This 3% can be gifted. We talk about the PMI, where with the Home Possible Advantage, your PMI is going to get yourself a little bit better rate than you would with the 5%. Now, it is, income based. It is in regards to, first-time home buyers. We said if you hadn't had a home loan in the last 3 years, you're considered a first-time home buyer again, so we could qualify you for that program. It works just like any other conventional, that once you're below the 80% loan to value, that PMI is removed. And, you're going to get some benefits with the conventional in regards to maybe, with your seller on, most of the sellers, as you know, like to have a conventional loan over an FHA. So you're going to be able to get a better, if you're negotiating, you're going to obviously get a better deal maybe with conventional over an FHA.
And just real quick, the reason why they tend to like that, not that that's always the case, but an FHA loan, the appraisal itself requires more than what a conventional does. And depending on the condition of the house, it may make them a little nervous. I know whenever we meet with a seller, we give you a list of things that an FHA would require over a conventional. That way, if they've got the funds to fix those things, they can. If they don't, then we know going into it that there's no reason to market it that way, and it's going to be very difficult to get it to pass. Just like people, no house is perfect. Explain real quick, because we keep saying PMI. Mm-hmm. What is PMI?
Your PMI is going to be is private mortgage insurance that's going to be put into play on all of our mortgages, unless you're doing a VA mortgage. The PMI is basically is an extra insurance that banks or Freddie Mac or Fannie Mae insure to the loan, just to make sure that if something were bad to happen in the first few years of a mortgage, that we're going to be able to kind of get back some of those funds. If the mortgage were to go upside down, foreclose, something were to happen to the property. It's just kind of an extra insurance that's there, which is completely opposite than of the hazard insurances, because I know there are a different couple of insurances that come in play. The PMI, though, when we're talking about conventional, you're going to get more benefits with the conventional, because once you're below the 80% loan to value, it goes away. Where an FHA, unfortunately, it stays on for the life of the loan. Okay,
and then you also mentioned gift. Explain that.
The gift funds, with conventional, it used to be where you could never have any gift funds unless you're putting 20% down. Gift funds is money that's coming from, a mother or father or a close relative, where they're going to give you the down payment. First-time home buyers, some people coming out of school, obviously probably aren't going to have 5% down to put down on a $150,000 home, where mom and dad may have some money saved up. They can gift that over to use for your down payment, where now I can do that with a 3%, 5%, or even on the FHA at 3.5%, where before in a conventional, it had to be only in a gift funds when in regards to a 20% down payment.
One of the loans types that we didn't discuss is for veterans. Let's talk about VA loans.
VA, to me out there's no better program out there than the VA loan. You don't have to put anything down if you don't want to. We've talked about PMI. There is no PMI on a VA loan, which is nice. Now, you do have what's called an upfront mortgage insurance, which is like a funding fee. Is what it basically is called, a funding fee, depending on if you have bought a home before the VA or if you've refinanced. Those numbers can always change in the VA funding fee. It just kind of depends on what type of veteran you are, and I can actually even get those waived if you have any disability coming in from the VA. So technically, you're going to get a lot more house for your money in a VA than you would on any of the programs.
The funding fee is actually amortized into the loan.
Correct. Yep. So something that you don't have to pay for. But it does change. The rates on the funding fee does change depending on your military background and if you've owned a home before.
So say you're a buyer, you're thinking about looking for a house, you're kind of kicking it around, and you really have no place to start. Say even you're waiting till summer. When's a good time to call the lender?
It's always a good time to call the lender at any point. Obviously, the sooner the better. It's going to give you that peace of mind knowing that you're already qualified. Pre-qualification letter is the first step you always want to take when it comes to buying a mortgage. If it's something that you want to do in 8 months from now, give me a call right away. I'm going to be able to tell you, hey, if you were looking to buy a house right now, you're qualified. And if you're not, there's things we're going to be able to do to talk to you, to fix that credit or to get to that point where we need to be to get you qualified. That way, when that house of your dreams shows up in 8 months, you're not going to, be behind the 8 ball and not be able to get that house right away. Absolutely.
So, Robert, tell them again how to get a hold of you.
Yeah. My phone number at Landmark National Bank is 785-228-8619. You can also reach me by email at rwilson@banklandmark.com, or even go to my website at www.robert.banklandmark.com.
And if you would like to buy or sell a house, we'd love to talk to you at Realty Executives Preferred Advisors. And our number is 785-213-5188. You can also shoot us an email at preferredadvisorsteam@gmail.com. And you can check us out online at www.topecarealtyexecutives.com.
Thank you for listening to Real Estate 101 with the Karey Brown team from Realty Executives Preferred Advisors. Tune in again next Sunday at 11 o'clock for Real Estate 101.